Good morning, everyone. Welcome to this rundown for global stocks and commodities for the 17th of September. The US market and indeed European markets finished very powerfully on Friday night. The US market finishing at 2,500 points, and I know a lot of people find that pretty hard to believe. But as I've been saying now for a long, long time, there's absolutely no reason why that rally, particularly in America, couldn't continue, and that it's being well and truly supported by just good old solid fundamentals and earnings and valuations. So no real surprise at all in that respect. I guess the only real surprise for me is the fact that the market continues to ignore North Korea and all of those geopolitical considerations. It also continues to ignore the virtual stalemate in Washington, which is making it very difficult to get anything done. Yet the economy is still going along quite well. So I guess that's the only surprises for me. So let's jump in and have a look at what we're going to deal with this week. I'm going to do a detailed analysis of an emerging opportunity, which I think you'll find interesting. It's a US biotechnology stock, and it's really linked to the webinar I'm going to be doing, public webinar on Thursday night for the Portfolio Analyst Service. So I think you'll find that interesting, and of course the normal general stock and commodity evaluations. Looking at gold and oil, which went in opposite directions last week, and also just the increasing divergence between Australia and the rest of the world. It really is getting quite substantial now. So let's look initially at American stocks. The S&P index was higher by a very robust 39 points on the week. It's really a very strong run. New highs despite the hurricanes, two hurricanes, North Korea firing missiles left, right, and center, earthquakes in Mexico. There was all sorts of things that could have given the market reason to have a bit of a sell-off, but none of that occurred, and there's really no end in sight to the strength in the US market, and that'll be really obvious to you when we look at the chart. The other things that I'd also point to, which really support the current market position, is that we're not seeing any deterioration in breadth. Now, always before there is a significant top in a market and a major turning point, you will see anywhere from 6 months to 12 months in advance the market breadth start to wane away. The smaller stocks get sold off, and it's only the market leaders that are holding the indices up. And when we look at the advanced decline line, which set a new high, despite the fact that this is a seasonally weak time of year, when we look at the Russell 2000 index for small caps, it'll just be screamingly obvious to you that there is no weakening of the breadth of the US market rally. This is participation on a very, very wide scale. Another thing I would point to is that there's a lot of evidence out there that fund managers are still hoarding cash. There is a lot of cash on the sideline, and I can only wonder what's going to happen to the market when they're forced to play catch up, because eventually fund managers do feel the pressure, and if they're underperforming while the market's going up, that's one thing that their clients hate. They're going to be forced into the market whether they like it or not, and I think when eventually that does happen, then we might be starting to have a conversation about a market top. But at the moment, fund managers are still hoarding cash, and we're a long way away from that yet. The US dollar still in downtrend. We had a little bit of a blip for a couple of days, but it reversed back down again on Friday. So it's still a pretty sorry sight at the moment. We've got two support levels. One is about 1.5% below where the current level is, and there's another more significant one about 2.7% lower. So I think the path of least resistance is down, the trend is down, and I would think there's a fair chance the US dollar is going to be a little bit lower in the course of next week or so. So turning now to the S&P 500 index, you can see this was the week that we had. We closed here last week at 2461, and we managed to close this week at 2,500 points for the first time ever. And you'll notice the last, or in fact, virtually every session during the week, we had gaps, but those sessions all closed on their highs. So the buying went all the way into the end of the trading session, which is a very positive sign. No signs of selling coming in at the end. Now I've had this structure in place now for a number of weeks. I had a potential retracement level down to here. This was when we were in this period here in mid-August, and then I had another level lower down. But obviously that is completely redundant. This one also now looks redundant, and we're just in the process of breaking out. So you can only think that the market is likely to just work its way higher in this stair-step pattern. So we get an advance, we get a consolidation with a small pullback, we get another advance, another little consolidation, another advance. So it's just basically going up 2 steps forward, 1 step back, and I don't see any reason that that's not going to continue. So extremely positive outlook for US stocks. Let's look at this is the NASDAQ, the QQQ, which is the ETF covering the NASDAQ. I won't go through all this detail because not a lot has changed, as you can see. The market went up slightly for the NASDAQ over the week, and it's still looking extremely positive. It's still leading the market higher, and it's still in a very strong uptrend. Let's look at the Russell. As the Russell looked a little bit shaky back through here. So the end of July down to the towards the end of August, the Russell did lose a little bit of ground, but you can see it's rebounded almost all of that in the last 3 or 4 weeks. So the breadth looked a little bit wobbly there for a couple of weeks, but you've always got to give the market time to show what it's going to do, and it's just basically surged back to the all-time highs on the Russell small cap as well. Let's look at Germany. This is the DAX. So we've got clearly a very strong uptrend in place on the DAX. We've got this. This is our 200-day moving average line, and you can see an extremely robust trend. We've had a pullback. The DAX probably got a bit ahead of trend. So we got a consolidation that started in May, pulled back to that 200-day moving average line, and formed a little short-term base, and has now started to move away again, and looking quite positive. And if we look at the FTSE in the UK, a little bit of a sell-off the last couple of days. I haven't really had a chance to look into why that was, but clearly still an uptrend, and maybe just leveling off a little bit, but no real signs of undue weakness there in that market either. Now here's the US dollar. So if we pan back, you can see we've got this basically widening tops and widening lows structure, sort of what's called a megaphone structure. So it's possible we might find our way back down to here. So we've got 2 support levels, one here at around about 90, just under 90.5, and then another one down here at 89.5, which really picks up some important highs back through here. So that's the US dollar. And if we zero in a little bit further, you can see we broke down, managed to scramble back just above that level, then we dropped, formed a lower low and a lower high. So we just continue to form lower lows and lower highs on the US dollar index. So I think there's probably a little bit more short-term downside to come yet. Turning now to the Australian market, the Aussie dollar eased a little bit to 80 cents. Not a great deal, and that's largely because the US dollar had a little bit of a bounce. And also the weakness in commodity prices, which we've seen in the last few days, which was, I think, a lot about speculation in the futures market. That weakness may be quite temporary if the US dollar continues down. So I think the short-term conditions are in favour of the Aussie dollar, at least holding around this level. The ASX 200 was higher by 23, so we managed to get a bit of a gain, but the miners were under pressure in the last couple of days as commodity prices cooled off. And as I said last week, just if you want to make headway in the Australian market, forget the top 50 unless you are purely in it for the dividends, because I don't think you're going to get any capital gain, and you may even experience some capital loss. There are some good stocks in Australia, but they're small to mid caps, and they're not household names. 99% of people won't have heard of most of the stocks, the good stocks that create the opportunities. So you've got to dig very deeply and very thoroughly to find the gems. There are a few, but they're hard to find in Australia. So let's just take a quick look at the index. Actually, we'll just look at the Australian dollar first. It's that one. So we had some important resistance at around just a tick over 78. And we managed to get above that resistance, got up to 80, pulled back, tested the breakout, and now we've just sort of moved mildly higher again. But there certainly is some resistance around this 80 to 82 level for the Australian dollar. And this is the index. So despite a bit of a plunge on Friday, we still managed to record a small gain. But you can see that we're just anchored in this area between 5,600 and 5,900, and we've been there basically all year. We broke out early in January and haven't moved since. So pretty somber, the Australian market. Turning now to precious metals, gold was down by $26 back to $13.22 after a really huge surge the week before. And there was a short-term excess in the futures market that had to reverse. And I do note that the physical market, so the actual real live buying of gold and silver through bullion dealers is actually quite weak, despite what we've seen in the futures market. So that's a concern, and that's why I don't think the gold price is going too far too soon, because the physical market is weak, and you really need that to kick in. We're seeing a little bit of pickup in the ETF market. The holdings in GLD rose again about 4 tons to 838 tons. So there's a bit of interest in ETFs, but you need the physical market to be firing as well. And at the moment, it's not. So you just got to be careful in this area of the market. Precious metal stocks, there's really still no conviction or trend, so nothing much has changed. So let's have a quick look there at, we'll look at gold first of all on a daily. So we managed to break out, really nice breakout above 1300 late August, so about just over 2 weeks ago. Shot up quite nicely, didn't quite make the resistance level up here, and we've had a little bit of a pullback. If we look at that on a weekly chart, you can see we've managed to break out. So one step at a time, and this is this is 2011, so it's a pretty big picture we're looking at here. 6 years worth of data. So this is going to take some time to unfold. So the first step has been that we broke this big downtrending line. So that's the first step. We've moved out of there. Now, the second thing we need to do is to move above this previous high at 1375. So that will be the second achievement. And then, of course, once we've got above that, then we've got another resistance level at about 1436. And after that, then we've got a crack at basically moving back towards the 2000 mark. So there's really 3 hurdles. We've cleared the first one. We've still got 2 more to go, and it's possible that this could take another 3, 6, even 12 months to really gain some traction. But it will depend a great deal on the geopolitical side of things, I believe, to really get gold going. And we'll just check in on silver. So it looks pretty much the same, a little bit weaker in silver as well. Now GDX, not a lot of change here. This is a weekly chart on GDX. You can see we were down a little bit. None of the boxes that I need to tick are being ticked at the moment. So we still remain in a fairly cautious precious metals market at this point in time. Other commodities, copper was a little bit weaker. It had just got ahead of itself on speculation when it got up to $3.13. So that was just a bit of a correction in the copper price. Crude oil went higher to almost touch $50 on the close. Energy stocks, we're starting to see a change of character underway. So I think this is the first time I can say that I'm feeling a bit more comfortable that we've now got a base in place for energy and we're not going to get lower lows. Now, it doesn't mean that there won't be some downside in the short term, and in fact, I think there will be when you look at the chart. But at least this is the first step in the process. We've had a massive bear market. You need to see a change in character. You need to see the market starting to do something different to what it's been doing. And I think we're seeing that now in energy stocks. But we could still be 12 months away from energy stocks going back into an uptrend. So, another sector just to be careful of. So the medium-term direction is not resolved yet, but some green shoots, let's put it that way. Now, I just want to take a look at the energy ETF. So this is XLE. So you can see the change of character here. The first step was we had a big downtrend, which started at the end of 2016. And you can see that we just formed lower highs, lower lows all the way down. Now, this was the first little sign when we broke this trend line, first little sign that maybe something was changing. We got a little bit of a sign of strength in the index. But we then plummeted back down again, formed a sharply lower low. So that blew that away and basically demonstrated we're still in downtrend. Now, we've quickly recovered, and you can see we're starting to move higher again. And look at the volume. The volume is definitely starting to pick up on the upside. Whereas when we had this last rally up through here, we didn't see that. So that's the change of character. We're now seeing increasing volume coming in on the upside rather than on the downside. Now, we're forming a range here. I suspect the range may be between 63 and 67 on the XLE ETF, and we could obviously quite easily move back down to 63. So we may bounce around here for a while. So I don't think this is quite ready to go yet, but at least step one, change of character. So there's the spot copper chart. Came off from some speculative highs, and there's oil improving from 46 to 50 over the last couple of weeks. So just to wrap it up, one of the best pieces of advice I can give you is don't become too reliant on the way that you've always done things. And I get to communicate with a lot of different people, and it's so obvious that many investors, and I guess this is just human nature, it's the way that we're wired, they just want to continue to do things the way they've always done them, or that they cling to the concepts or the old wives' tales that people either believe are true or used to be true in the past but are no longer true. So I think one of the best pieces of advice I can give you is just to be totally open-minded, because things that were applicable 10 years ago, or companies that were great 10 years ago, chances are they're not anymore. So you've got to be really flexible in your thinking, keep an open mind, just go with the current strength, and figure out ways of how to tap into that current strength. The power of technical analysis: if you can read the footprints of the major players, then you are so far ahead of everybody else. And it's extremely difficult not to be profitable if you can read the footprints of the major players. And that's what I've been doing for a long time. And it's especially what I'm doing in Portfolio Analyst. So just on that score, there's you may have seen advice on this already. There's a public webinar for portfolio analyst. It's next Thursday at 7:30 Australian Eastern Time. Now, as I promised, I just want to show you a stock, a US listed biotech stock that I would like to just show you the analysis. So this is the sort of analysis that I do all the time. It's the sort of analysis that I do in Portfolio Analyst. And yeah, I just thought you might find this interesting so that you can read what the footprints of the major players are doing. So this is a stock called, this is not a recommendation by the way, but you'll see that it's just completed a pretty nice pattern. So this is Abeona Therapeutics. The code is ABEO. And I've taken some of the recent history out. So the last candle you can see here is the 16th of August. So for the purpose of the exercise at the moment, I've removed the last month of trading data. So let's have a look at what we've got here. We formed a little base, pretty low volumes through here, and then you can see the market started to move up quite strongly and then really screamed up these last couple of days. See these two very big volume candles, those really big green bars there. So that was where the market got ahead of itself. We had a bit of a buying climax. It just went too far, too fast, and you got to get a bit of a pullback. So the key then is the way that the pullback occurs and what you can read into that. So you can see that we did get a sharp pullback from that buying climax. A little bit of volume associated with it, but you can see the volume did tail away pretty quickly. We got a little bit of a rally, and you can see some higher volumes coming in on the upside. So that's a good sign. We then got another decline, formed a lower low, but look at the volume. The volume really tailed away, so it's telling you that there's no enthusiastic selling. We then got a sharp sell-off, so that was the selling climax. So let's just put a trend line through here. So that was our selling climax in the short term, where those perhaps that had bought, people speculating who'd bought on the way up here, when the stock broke this low, then there was a sudden cascade of selling. So all the people that had bought coming up through here realized that the trade had failed in their view, and so they dumped the stock. So that was the selling climax. That's what you can read into that. Now we had a one-day bounce, another little tickle to the downside, and then we started forming a base. So we're getting the accumulation, and this is where the major players who are looking at this stock are looking to accumulate stock as cheaply as they possibly can. So that's their game, is to basically soak up the selling from all of the disappointed speculators who jumped on board coming up through here in August, September of 2016. So that's their objective. And at various points along the way, they'll increase their buying. They'll buy a little bit. They'll send the price up. That'll encourage some sellers to come into the market. The people that are looking to get out at a slightly better price, that decreases the price again. But you can see that the volume on the downside is extremely modest, very low through here. We then get another little spike up, and we get another little run down here, but again, it's all on low volume. But you can see that we form a slightly higher low. So this low is slightly higher than here. So just the beginnings of the start of a bit of a markup phase. Now you can see that the volumes here, so this is the 22nd of June, the volumes really started to pick up. So this is where the major players are unable to buy stock at these really low levels down around the $5 mark. They can't get any more stock down at that level. And so now they're having to start to mark the stock up again. They're having to pay higher and higher prices, and they really start to press the go button. So we got a strong run up, a little bit of a pause for a few days, and then we got another burst to this what formed a double top here. And you can see that really strong volume on that particular upswing. So let's just zero in on there. So really strong volume up to that point, double top. The market just consolidates for about 7 or 8 days, and you can see the volume extremely low. there's not much, not a lot of selling happening here. We then get a breakout. But that breakout only lasts one day. And this is where you need to be really clear about what you're doing here, because a lot of people would jump on this breakout, and then, of course, the market loves to play games, the computer algorithms, and the bigger players perhaps initiate some more selling to try and drive the price down so that they can try and accumulate some more stock more cheaply. So there is a little bit of selling, but this pattern is already established. You know, I read this as there are major players buying in the market and they're not going away because they're positioning themselves for the next year, 2 years, 3 years. So they're playing this game of trying to push the market around, try and encourage people to sell and panic and get rid of their stock so that they can accumulate at a lower price. So once that plays out, then we start to see the volume increase again. And this is where I'll now take you through to the current day. So this is the 16th of August. So let me walk you through day by day. So a little bit of a pause. Market's still basically just tracking around sideways. But again, you can now see we're now getting positive candles again. Look at the length of the green candles. They're much bigger, and we're getting more volume on the upside than we are on the downside. There's another one. We're now back above that resistance level. So, this is a point where you can be pretty confident about where this stock is going. And that was where I personally took a position after this day. So I took a position the following day, which was here. Now you can see that for at least that following day, I was then slightly behind. But we're just consolidating. There's a tussle going on around this initial resistance. So we've got a couple of resistance levels. One was formed by that high and the other one was formed by that high there. So we had two resistance levels. So we spent some time consolidating underneath the first one. We've broken out, run up to the second one, and then a really nice surge occurred on the 30th of August. So a nice, really strong breakout. We get a few days of pausing, and you can see here that we've got basically an upward trend. So we've got a lot of small range candles. The volumes are generally being sustained a bit higher, so there's a lot more interest in the market. A few small range candles, but with an upward bias to it. And this sort of pattern has a high chance of suddenly breaking out. And that happened basically on Friday night. So that's now the last candle. That was Friday night, the weekly close. But I first started spotting this through here. So I've been tracking this since the end of June, and actually took a position here on the 25th of August. Purely from what I had seen through this period here, the footprint of the major players, it was clear to me that there was significant accumulation going on, and that there was a very high probability of this stock, breaking out. I didn't know that it would break out with this degree of force. This is a very pleasant surprise, but to me the odds were heavily in favour. So I thought you'd appreciate that example of the sort of analytical approach that I take to technicals, and just how much information it can give you if you know how to read effectively. So what I'll be covering in this webinar on Thursday night, the most powerful buying opportunities that I can find in Australia and in the US at the moment. They're basically coming from the strongest sectors out there. So that's one of the most important tasks of a technical analyst is to identify where the strength is. I'll be doing some detailed fundamental and technical analysis, so there'll be a good educational component in there. I'll be looking at how to spot when a stock is about to surge, and I've done just that in that little example, but there will be others. And also effective techniques for stop losses and taking profit, and of course some Q&A. Now I would like to thank, last week I asked if you would be good enough to complete a survey. I really like to thank the people who completed that. There were quite a lot, so I really appreciate it. It gave us a lot of valuable information, and we are going to be incorporating some of those ideas um, into this weekly video. But we are incorporating all of the ideas certainly into Portfolio Analyst, because there was some terrific suggestions made, particularly around the areas of education, and that will be a major thrust of Portfolio Analyst. So I think you'll find that either through this or more likely Portfolio Analyst, all the suggestions that were put forward will be incorporated. So thanks again for taking the trouble to do that. So that's wraps it up for this week. There's my contact details, and there will be a link just below this video for you to register for Thursday night if you'd like to join. It's free, and yeah, I think it'll be a terrific session. So I hope you can join with me. That's it for this week. Cheers.